the laws and regulations on this seem to be changing almost daily. So the slides were put together on August 4th. So I know that's already a week old, but hopefully there's not too many drastic changes between now and when it comes time for you guys to file your actual tax returns for 2020. All right, so to go ahead and get started, we'll start with the PPP loans first. Basically, in terms of your tax return, there's really 3 different buckets at this point in time. The first one is what happens to your taxes if the entire balance of the PPP loan is forgiven. The second one being, okay, I got the PPP loan, I applied for forgiveness, but they're only partially forgiving it. What happens then? And then the third bucket being that the loan's not forgiven, you don't apply for it, you didn't use the funds as you were supposed to, what happens then? So that's kind of what the 3 buckets that we're gonna touch on for the PPP loans and taxes. And is current based on the CARES Act that is in place, and is subject to change. There's currently the HEROES Act that's out there, the bills and legislation at this time. So that would be something that to keep an eye out for if you see any changes, something to look for that, hey, that might impact our taxes. So the first one is if your entire PPP loan is forgiven. Currently, the government, the IRS is saying that the PPP loan, the balance that's forgiven is considered to be tax exempt income. So for it to be tax exempt income means you don't have to pay any taxes on the loan balance. If you got a loan for $20,000, the entire balance of the loan is forgiven, you basically just received $20,000 that you don't have to pay tax on. The flip side to that is that the expenses, so the payroll, the rent or utilities, the items that you used that $20,000 on are also not deductible for taxes. So you got $20,000, you paid 5 employees the balance, say it was all used for payroll, you paid 5 employees $20,000, you don't have any income, and you don't have any expenses. So it's almost as if everything happened in cash and nobody saw what happened. You know, it's just like you pocketed the cash and you paid it out to people along the way. But it didn't really, almost as if it didn't really take place. It did, but that's kind of how that's currently taking place. So you don't have to include any income. You don't have to pay taxes on that $20,000. But there's also, again, no benefit for the $20,000 of payroll that you incurred for that. So you have a net 0 impact. So some people are saying, well, you know, they are thinking that this would be one of the areas where it might change, in that they aren't sure whether or not this is how it was intended to be in the beginning. So what we might see, or what you might see before it comes time to file your tax returns, is that they do end up allowing that $20,000 that you used on payroll to be an expense on your company's books or on your company's tax return. So if you're a Schedule C, it would be an expense on your Schedule C. If you're an entity, a partnership, or an S corporation, it would be an expense on the S corporation. However, at this time, it's all considered tax exempt or tax exempt related, and there is no benefit and no penalty for the forgiveness. So the second option is when the PPP loan is partially forgiven. So say you received the same $20,000 loan, but only $10,000 of it is actually forgiven. So that's where you've met the requirements for some forgiveness of the loan. The unforgiven portion, so the remaining, sorry, let's use 20,000 and say 15,000 is forgiven. You've got $5,000 that is not forgiven, was not used for qualified expenses. So that $5,000 that was not forgiven is considered a loan, just like any other loan that you might already have for your business. And then any of the expenses in excess of that $15,000 that was forgiven would be expenses for your business against your business income. So backing up just a little bit, you have 15,000 that's forgiven. That is treated the same as what we were just looking at on the previous slide. It's still considered tax exempt income. The related $15,000 of payroll is then considered tax exempt related expenses. And therefore that would be your net to zero. Now you've got $5,000 of a loan and $5,000 of expenses that you get to take on against your business income. And then the third bucket is that the loan is not forgiven at all. What happens? So if the loan's not forgiven, no harm, no foul, it's a loan, just like any other loan that you have for your business. So again, all your expenses would be deductible against your business income. You don't have any income to pick up unless you earned it for your company. And then the expenses are all deductible. The loan is there on your balance sheet. Any interest that you pay on that loan would also be deductible as an expense on the business. So that's kind of the three buckets that we're looking at right now, and how that will currently play out on your tax return. Are there any specific questions for clarification, Gwen?
Well, I haven't seen any questions come through the chat box yet.
Okay. All right, and then I'll hand it over to Trina to talk about the EIDL grants and taxes. When are you able to unmute, Trina?
Hold on. Sorry, for some reason I don't see Trina in the list here.
Hagerty. It's the Hagerty one.
Ah, see, you confused me, but I didn't have. There we go.
All right. Can everybody hear me? Gretchen, are you able to hear me now?
Mm-hmm.
Okay, perfect. Hello, everyone. So I just want to run through the EIDL loans and the EIDL advances, and then also, how this might impact your state tax returns before we answer questions. I do think that, the most important part of this presentation is probably answering specific questions that you have. So if you guys have anything you want different clarification on, please feel free to throw in a question via chat, and Gretchen and I will do our best to answer those. So, so for the EIDL loans, there's really two items that are commonly being referred to as EIDL or EIDL. There's an EIDL loan that you would have applied for, and it's going to be, excuse me, a loan just like any other loan. I think the EIDL loans that were taken out are typically 30 years and need to be repaid. The EIDL applications also allowed you to apply for what they're calling an EIDL advance grant of up to $10,000. I believe the initial publication, when people initially started applying for those, it was a $10,000 grant that didn't need to be repaid. And based on the oversubscription, the government came back and said that that's limited to $10,000 per applicant. And it was also limited to $1,000 per employee. So if you are a small business and you maybe have 2 employees, you may have received an EIDL grant of $2,000. So that's the EIDL advance grant. So if you received an EIDL advanced grant, those grants are eligible for forgiveness, unlike the loans that need to be repaid. To date, there's been no specific guidance on the tax treatment of those loans. There's a lot of speculation right now on whether they'll be treated the same as the forgiven PPP loan. So essentially you would record, if you received a $4,000 advance, you would record $4,000 of tax exempt income, offset by $4,000 of tax exempt expense to net to zero. Some folks are saying it'll be includable as income with the offsetting expense, so it will still net to zero. It's interesting because, the SBA, everything's changing so quickly. There's just not concrete guidance right now on how to account for, truly do the accounting for the advance grants. However, the advance grants, as long as they're used for payroll, rent, utilities, paying for things that you would have typically paid for if the business was fully up and running, those items are all considered, EIDL advance grant. They're permitted uses of those funds. So that's kind of what it's looking for. Again, the EIDL loans treated as any specific loan. The EIDL advanced grant, though, is forgiven as long as you can document that you used it for a permittable purpose. So just like the PPP loans, I know Gretchen mentioned that guidance is changing. Guidance is truly changing, 3 or 4 times a week on the PPP loans and the EIDL loans. We're getting new guidance, we're getting new clarifications. It's about time. I think the HEROES Act is going to make really big changes. So keep your guys' eye out for the HEROES grant or the HEROES Act. When that comes into play, that's going to change a lot, I think. And also for the states. So I don't know, Gretchen, if you want to switch over to the next slide for me.
Gretchen and Trina, before we move on, I personally have a question about how EIDL and PPP interplay, because there's been a lot of, as you said, questions about this, and who knows what the end result's going to be. But a lot of our clients have asked about, if you got the EIDL advance and also a PPP loan, currently it seems like the SBA is saying that your PPP loan forgiveness amount will be reduced by the amount of the advance you received. Do you know if that's, is that currently how you understand it?
That is currently how we understand it. I believe that is one of the things that may change in the HEROES Act. Mm. So, currently if you have a $10,000 EIDL advance grant, that would reduce, what could be forgiven on the PPP loan. However, I'm not sure that was the intention, or necessarily that's what will continue. So it's definitely something to keep your eye on. I think the SBA is kind of leaning that way, but if there have been people who have researched and looked at the actual language of the bills and of the grants, and I don't know that the technical language is backing up the SBA guidance. So that's definitely something that we expect clarification to come out on in the next few months.
Thank you. We do have a couple of other questions. They're not necessarily related to EIDL though. So mostly, I'll just answer a couple of quick questions that came through that are general questions about PPP. One question was about whether or not the PPP funds could be used for rent expense. And yes, that is an eligible use of proceeds from the PPP loan, as long as 60% or more of the loan is used for payroll, then the loan can be forgiven. So you can use up to 40% of your loan for rent expense. And as sole proprietors, you don't have to have proof of payroll. You are considered your employee of your business, so there's no proof of documentation for payroll purposes. Like, you don't have to have a payroll report or payroll tax forms or anything. I think that's pretty much it. There's a couple of other, but they're more specific, so we'll move on.
Okay. Okay, and just a clarification for your comment about rent. So you can absolutely, just like you said, use rent. If you've met the qualification that you've already spent 60% of the loan on payroll, you know, if you're using an 8-week period, maybe your rent expense doesn't cover the next 40%. There's actually a provision, the way that the wording around rent reads, it says paid or incurred. So, you know, for payroll, it's a different metric, but for rent, it's either paid or incurred. So if you have the ability to prepay a few months of rent in your PPP loan window, whether it's 8 or 24 weeks, you can prepay rent. And as long as that cash has gone out to prepay rent, that will qualify in your pool of funds for forgiveness. So just keep that in mind. It might come in handy. All right, so let me skip through to just a couple comments on state taxes, and then if we have any other questions, we can answer those. So, you know, the government is still trying to figure out what we're doing with the PPP loans. You know, there's a lot of guidance on how to fill out an application. There's a lot of the small lenders, small businesses, large banks are petitioning the SBA right now to ask for loans under a specific amount to just be blanket forgiven. That's still kind of up in the air. The other thing that's really, really up in the air is the state conformity. So Gretchen and I, we live in Colorado, so we're going to just give you an example on what Colorado's doing, knowing that, you know, we have people spread across the country on this call and in this video. So just to give you an idea what to look for. So Colorado is what they call a conforming state, which means when the Internal Revenue Service changes its perspective or how it's treating something, Colorado conforms and follows that. So if you live in Colorado, currently today, there will be no net income and no net expense for the PPP loan if the full loan is forgiven. That's today. And it's entirely dependent on what state you live in. So if you live in California, it's completely up to the state. So really what the state of California, because many states, I guess probably half are conforming and half do something different. Many of the states in you know, say their 2020 legislative session will go back and they'll say, do we want to adopt Internal Revenue Code changes that were effective as of 12/31/19, yes or no? And they'll vote that in. If they vote that in, it's typically the end of the previous calendar year, which was before all this PPP loans and rules kind of came into play. So it's going to be hit or miss on which states are going to conform to federal. If you're in a conforming state, it's pretty easy. If you're in a non-conforming state, it's going to be hard. And I do believe that once the Internal Revenue Service and the SBA guidance kind of settles down and more of these questions are answered, I think that the states are going to be in a better position to make publicly known what their tax treatment is going to be of these loans. So it's definitely something to look into. Keep an eye on it in your state. You know, this is a big enough issue for a lot of taxpayers. I do believe that towards the end of the year, the states will make it very publicly known what their positions are. So I guess keep an eye on it, you know that there are states right now that are going to tax this income. There are states right now, they're saying there's no income, no expense. It's just really hit or miss depending where you live. So keep an eye on it and know it's going to be an issue. We just don't have any answers for you right now. So much like all of the PPP items.
Hey, Trina, off the top of your head, do you happen to know if Georgia is one of those states that conforms with the IRS thought or definitions and treatments?
I do not know, but I can look while Gretchen answers more questions.
Great. Yeah, actually, Gretchen, we do have a few questions that I could throw out there.
Okay. I was like,
One,
here's Sorry, it looks like Georgia is a conforming state.
Great,
Okay.
thanks.
Perfect.
So going back to the EIDL and the treatment of how EIDL and PPP are going to interplay, there seems to be, maybe just going over an example might be helpful. But if somebody received maybe like a smaller PPP loan and more from an EIDL loan, and they're both used for business expenses, how does that impact their finances or taxes? And I guess this is where we have to distinguish between how much was in the loan versus the grant, right?
Yeah, I think what you're gonna have, it's gonna go back to what category, which bucket does it fall into, whether it's forgiven or not. And then if all of it's forgiven, it would be tax exempt and no expenses to reduce your business income. Does that, I might be oversimplifying the question, but I mean, I think in terms of what we know at this time, I don't know that there's any way to get more specific in how they play with each other.
Yeah, exactly. It seems like that's going to be where we're needing more guidance from the SBA and hopefully the HEROES Act.
Yeah, and I believe the HEROES Act passed in the House, but hasn't made it through the Senate yet. So that's where we're anxiously awaiting to see what will happen in the Senate with that bill and what changes or what guidance comes out from that.
And there's a question about how would somebody that's using QuickBooks input the PPP loan as forgivable? Is it input as income? And I'll say with the EIDL grants. So I guess this is more of like an accounting systems question.
Yeah, no, that's great. For purposes of tracking it more easily, I would create a new account for the PPP loan and put it in the category as other income so that it's real easy for the individual or their accountant to go through and see the amount that was received the amount that was forgiven. So that would be on your balance sheet as other income. If there's any portion that's a loan, it would stay on your balance sheet as a liability account. And then when you find out how much is forgiven, that's where I would create an account that's just an other income account in QuickBooks. Just title it PPP forgiveness or something like that. And then leave your payroll expenses where you normally would. And your accountant should know then to take out the amount that's forgiven, should remove that also from the expenses as well. If you want to create a PPP salaries and wages account, you can do that as well. I leave it up with the payroll piece. If you're tracking that separately, that might be a nice clean way for you as well as your accountant to see exactly what you use that money for.
And also related to PPP funds being used for all payroll, that would mean that other expenses can still be deducted from taxes.
Yes, that's correct.
And more than 60% of the PPP loan can be used on payroll and be forgiven.
Yes.
There was a question about for sole proprietors or anyone filing a Schedule C, if they got the PPP loan to cover replacement of their own lost net income based on 2019 levels, would that be treated as income? Would the PPP loan be treated as income in that case?
Trina, do you want to answer
The
that?
answer is no. The answer is no. So, even if you're a sole proprietor, that PPP funds were enacted exactly like you said to replace lost income. So, in your financials or in your QuickBooks, you would show the income and an offsetting expense that would still net to zero.
Mm-hmm. And I know that, so a number of questions that have come through are related to the forgiveness application process. And so I will take this moment to, as a representative for DreamSpring, to talk about what that looks like. We are still, like Trina and Gretchen have mentioned, we're hoping that Congress passes the HEROES Act. And if they do, there's talk of a lot of changes for the Paycheck Protection Program that would make the forgiveness process completely, like, it could make it very easy or eliminate the need for applications altogether. So they're talking about loans under a certain amount possibly being forgiven completely, just without, like, automatically. And so if that happens, that would reduce a ton of paperwork for all of you guys and for us. So we're waiting to take applications. We were waiting for a while because the SBA hadn't given us any way to communicate to them when we had made a decision on loan forgiveness, but we will work with all of our clients on you'll submit your forgiveness application to us. If you have to submit a forgiveness application, it'll come to your lender and we will determine how much you're eligible for in terms of having the loan fully forgiven or partially forgiven. We will communicate that to the SBA and have the loan reduced or canceled at that time. We will be communicating via email with all clients about that process. So keep an eye out. I know we have an email coming out tomorrow with just another kind of a recap of the same information saying, like, yes, we know people are anxious to have their loans forgiven, but we're really hoping that it'll be a lot easier than it currently is based on the application and guidance that we have right now. All right, let me check and make sure I didn't miss any other questions that seemed relevant to the rest of the group. I think that was pretty much it. Okay, another question just popped in. Going back to PPP and EIDL, is it possible to take out a PPP loan if you already accepted the EIDL loan?
Yes, I believe it is.
You just have to use them for different expenses, correct? You can't use them for the same purpose.
Correct. So, for instance, if you know this week is in your covered period, and you employ me, you employ Trina, and you use your PPP, you know, your $10 from PPP this week to pay my salary, you cannot then use $10 from your EIDL loan to pay my salary this week. So you can apply for both, but you can't use your expenses to verify your PPP loan and your EIDL loan. So you can't duplicate those expenses, I guess, for rationale purposes. Does that make sense?
Yeah, I think it can be tricky because you can use it for the same category of expense. You can still use it for, like, let's say, like a PPP might cover payroll for 2.5 months, but then your EIDL loan could cover payroll for the period after that. You know, so
absolutely,
you're a little confusing.
It's going to be a tracking mess. It's going to be a mess to track, honestly. Absolutely.
There was a question about maintaining levels of employment for the 8-week or 24-week period that you can use the loan funds after being funded PPP. Do you have to maintain the same level of wage expense from month or during the 8-week or the 24-week period as you did in 2019 compared with 2019?
Yes, and that could be a class on its own. It's very in depth. Gretchen and I, a couple of weeks ago, sat through a class, and about 2 hours was based on different renditions of reductions in headcount and or payroll. So generally speaking, and Gretchen, correct me if I go off base here, generally speaking, if you are a business that was deemed to be non-essential, so for instance, my favorite bagel shop down the street is a non-essential business. They were forced to close based on county and state regulations. They would be exempt for the period that they were forced to close from that salary and wage reduction because they couldn't be open. So there are special provisions written in the loan forgiveness for non-essential businesses that didn't have the opportunity to stay open. You're going to see, I think, Gretchen, is the salary reduction by employee, does it start at greater than 25% of salary or wages?
I think it's greater than 25% reduction in employees.
Okay, correct. And it's per employee. So if you have 10 employees and 9 of them, maybe you reduce them 0 or 10%. And of course, this is a by employee calculation. And you had 1 employee that you reduced 50%. There are calculations and limitations related to that 1 employee that you would need to do. There are also limitations if you reduce headcount. There is a provision, and I am not as familiar with it. I know it's there, and I'm going to tell you to look into it. So if you reduce headcount and have fully rehired, Gretchen, is it by just the end of the 24 or 8-week period, depending what your loan, your covered period is, or the end of the year? Gretchen, do you remember which date it is?
I think it was they have until the end of the year to have
Okay.
rehired. But in addition to earlier where you had mentioned the non-essential business, the bagel shop that has to close, if it does open back up and by the end of the year it does not get back up to where it was before everything had to close down, it still falls under that exception that Trina had mentioned earlier.
So absolutely, I think, you know, for most, if you're a non-essential business that was forced to close based on county or state regulations, if something forced your business to close, look into those provisions, because that will, I mean, your business wasn't open to attempt to make money. How could you possibly have kept your employment where it was with your doors closed? It's just, you know, there's definitely provisions in place to assist you. And I believe in the drafts that we've seen from the SBA of the loan applications, there are sections that say, you know, was your business forced to close, yes or no? So they're definitely making it well known, know it's out there. If your business was forced to close, look into it, because it's definitely going to help with your PPP loan application and just getting a better idea of what those calculations are going to look like.
There's also some rules for seasonal businesses. So like we had the example of a rafting business in terms of determining how many full-time employees you had before, during, and after, basically. And that you there's a caveat that you get to choose your period that you look at in terms of how many full-time employees you had at that time. So if you happen to have a seasonal business that does not fall under the non-essential category, also be aware that you might have some better options in terms of determining your number of employees.
Following along this conversation of maintaining levels of employment and how that impacts the amount of a business's forgiveness for PPP loans, there's 2 following questions about what if an employee voluntarily resigns during that period and they just choose not to come back to work? Does that impact your the amount that your businesses, that your loan forgiveness can be forgiven, given that your number of employees has changed?
So it will, unless you have documentation that you reported that employee to the applicable employment agencies. So for instance, if you had an employee that said, I'm making more on unemployment, I'm not coming back, and doesn't want to come back, if you reported that employee to the unemployment agency, I think there was a form or some mechanism for reporting. If you did report that employee, it does not count against you then in the calculations for reduced headcount and reduced wages. If you decided not to report that employee, it absolutely will count against you.
So Trina, my understanding was that the employer had to maintain some kind of documentation for their PPP application. I wasn't aware that it required reporting to like the unemployment agencies, although that has been brought up more recently to me. So if somebody had like a resignation letter from an employee that said, no, I'm not coming back to work, and then they apply for PPP loan forgiveness, does the letter not count? Do they have to have some sort of documentation that they've reported it to a federal or county agency?
The latest guidance that we heard was that it does need to be reported to the local agency, the local, unemployment agency or similar.
I think the real issue too is that they didn't want, the people double dipping more or less. So if you have an employee that left on their own accord and now they've filed for unemployment, the government's now paying them unemployment that they essentially shouldn't be receiving, because they did have a job where they were continuing to receive their, whether it was hourly or salary wages. So I think that's where the filing with the unemployment, filing the form with the unemployment comes into play.
And would that be the same case for an employee that takes time off because of pregnancy, where they've decided not to come back to work? So they would also have to be reported to the unemployment agencies?
I don't know the rule about that. Sorry.
Yeah.
Specific questions. That's okay.
It is. Sorry. I'm not.
I think it would probably, go ahead, sorry.
Oh, sorry. I was just going to say, I know enough about payroll tax and reporting to know I don't know enough about payroll tax and reporting. So I want people to answer that question.
Yeah, I think it would probably fall under the same guidelines as the woman that didn't, or father that didn't come back from paternity leave. Are they trying to file for unemployment and that's why they're not coming back to work? Or are they staying home to raise their child? I think that's where it could be different. But also if somebody left on their own accord, you also would think or hope that the business would be able to hire somebody and replace that person that left.
That was actually another question that came up, is if you didn't maybe get the same employee to come back to work, but you hired somebody different, is that okay that it's a different person? Meaning you're spending your PPP loan on wages for somebody other than for whom it was calculated originally.
Yes, that is absolutely okay.
And what if, so we've discussed if the scenario of an employee leaving and choosing not to come back, perhaps because they are staying on unemployment, but what if an employee just leaves because they go to find another job? Would that be, so you can't pay that person, but you want to have your loan forgiven, do you have to, is there any grace period, or what do you call that, I'm forgetting my terminology here with the PPP forgiveness, but there's that shelter or, do you know what I'm talking about? The safe harbor, thank you, yes. Is there a safe harbor for that type of scenario where an employee says, no, thanks for inviting me back to work, but I found another job?
Gretchen, do you know the answer to that question?
I'm not for sure. Again, I would think they would replace that employee if they choose not to replace that employee because things maybe are tight. I think it still falls under that their number of full-time employees has been reduced.
And one last question, can PPP funds be used for other expenses like buying a vehicle, for example?
I would say no. The permitted PPP funds right now can be used for payroll and payroll related expenses. They can be used for employer contributions into like 401k, retirement funds, things like that. It can be used to cover rent. So we are seeing rent as rent of an office building, rent of a commercial space, rent of
Equipment.
we have a client who is in the trucking business. They rent some of their vehicles that they use to move products from place to place. We believe that that rent also counts. You can also use the PPP funds to cover utilities. So, water, electric, trash, gas for your vehicles, if your vehicles are being used for business purposes, I believe counts. Gretchen, what else can you think of in there? You know, internet fees for your business.
Cell phone. It's the word utility seems to be applied very broadly at this point in time. So it kind of casts a large net over other expenses.
And I'll just throw out there that for sole proprietors, if you are replacing your lost income if the PPP loan is replacing some of your lost income, you do not have to show what those funds were used for. Just having the PPP loan paid to yourself is the proof of payroll. We're going to be referencing back to Schedule Cs from 2019. So if you can use that for whatever you want. You don't have to prove to us that you used it for anything in particular. So if you're a sole proprietor, then your PPP loan can be used for, it's your personal, whatever you need to use it for.
Absolutely.
Well, I'm going to wrap it up. Thank you so much, Gretchen and Trina. We really appreciate this. I know that it seems like there's maybe more questions than answers sometimes. And I'll just encourage everybody on the call today to keep an eye out for the news. We're tracking the news, but we will be communicating with our PPP clients about anything that's relevant and important. And I'm sure all of the dust will settle more by the time tax season comes next year. So I don't think we need to have the answers immediately. Although it sure would be nice. All right, so we'll go ahead and end the video call now. We will post this video on our website hopefully by tomorrow, and if not tomorrow, then check back on Monday. Thank you all for joining us today. Have a great day.
Thank you.
Take care.
Thank you.